Well, I'll try my luck because it's fairly complicated in terms of the calculations, but net, if you're a consumer purely, it's good news for you because the surrender value goes up. But if it's good news for you, clearly it's not that great a news for the corporates, because that means that they'll have to provide that higher surrender value in special situations, which means that overall the profitability will take a hit. Now, of course, there are a lot of nitty-gritties in terms of what's the discount rate, etc., that you can use. But just to put it simply, I'll just reiterate what some of the brokerages are saying. UBS says that the surrender charges final guidelines will lead to higher payouts. The private insurers' VNB margins are expected to reduce by 140 to 310 basis points on a gross basis. SBI Life remains their top pick, but they believe the sector derating is overdone and perhaps it's time now to look at the sector positively. Jeffries also says that it will have a higher gross but lower net impact. Higher surrender value can lower the product gross margins by 6 to 8 percentage points, so it's not a small impact per se, but the impact is higher for Max and HDFC, while it's lower for iPro and SBI, and they say that the manageable impact can abate the concerns and aid the derating. Because remember, when the draft regulations were out earlier, they were a lot more harsher than what the final draft is. So given the fact that Street was prepared for the worst, my guess is that even if stocks open, kind of on the downside, there might be a bit of recovery and buying that emerge sometime, at some point of time, because the overhang goes away. There's more clarity now.
So everybody knew this was coming, and both in terms of the fine print which has come out. It is just like IRDAI reported this. There was a draft circular which was circulated, and the final implementation is actually exactly in line with what the draft circulation was. So there is no surprise in terms of the fine print. I also feel that the worst in terms of the regulatory overhang for the insurance, I think that is getting over. See, insurance sector has not got anything very large, meaningful from a regulator standpoint. And post-COVID, at least the life insurance companies, they've really gone through a lot of painful grind. Meanwhile, there are a lot of companies which now are at the threshold of strong profitability. So I think that this is one sector which has been on a back burner for a variety of factors: post-COVID transition, regulatory overhang, the tax concessions were not extended. If you put all that across, I think insurance stocks have been underperformer. And when the typical regulatory, when stocks, they start outperforming when there is end of bad news. And I think insurance sector is reaching that point where there is end of bad news. It's still a very complicated sector, and depending on your judgment, you cannot paint everything with the same brush. Life is separate and health is separate and general is separate. But I think from a comeback standpoint, if we are talking about private banks right now, I think it's a matter of maybe a quarter or so, everybody will start talking about private insurance companies coming back.